right, y'all. How you guys doing? Robert Williams here. Wanted to make a quick video because, as some of you may know, and most do not, I have been actively trading stocks, and so I'm trying to find a way, an outlet to be able to express um, and video journal how it's going. And I can say this: it has its ups and downs. So but I have to get this off my chest today because it was kind of nerve wracking. And I think I blew up my account. Not really, but losing about 30% of a small account is almost like blowing up your account. So I might as well have blown up my account. It was pretty tough to do. But the stock play was X Steel. X Steel. I was buying option contracts and um, got into a put contract the other day, and the stock went down pretty much to my sell point, and I decided to play it through and see how far it would run, and then the stock pretty much came all the way back up and took 70% of that profit, and then I stayed in the play overnight. But then this morning, which is July 10th, Feds did an announcement of uncertainty. S&P Dow hit all-time highs over 3,000 for the S&P, and I'm looking, obviously, seeing that stock, which follows the S&P pretty closely, for the most part, is going to run with it. So what do? As the stock goes up to about 1490, I get out of my put play, and then I enter into call on a out of the money strike, pretty much right there at the strike, $14 strike for expiration this week, to just pretty much do a day trade to play that bad boy up as long as it rides the all-time high of the market. And what does that thing do? It goes down. And my original put play then becomes back profitable. So I exit the put play at an expense. I enter into a call and get into that play, which then turns into another expense. And bam, in one day, I'm out 135, $50, which was about 30% of my account. Small stuff, but big to me at this point in time. And I'm glad I was able to express how I feel so I can get over it. That's the number one thing, is getting over it. But here's the mistakes that I made. I know these are the mistakes I made. Number one, I should have exited when the stock hit my sell price yesterday on my original put. Number two, if I did that, I'd be on a endorphin high, and I probably wouldn't have entered into any trade because I would have been satisfied with the fact that I made some money, which I didn't tell you in the beginning was after I did a call play on steel, looking for it to bounce off the 50 EMA as everything was moving up, and then it broke through the 50, broke through the 10, 20, and I took an even larger loss expense on that one. So if I would have entered into the put play, I would have definitely been in a good position to just make some of my money back for the most part. I would have made at least over 50% of the loss that I just recently had. And if I would have did that, I would have felt good about myself, would have felt happy, would have said, you know what, I took a huge loss, but I came back, gained some back. But now I just had 3 losers in a row over the span of about, 10 days. And so I know the big thing is just let it ride. You got to let it do its thing. It's all about probabilities, it's all about numbers, it's all about averages. So I'm not done, not knocked out, but I got to find a way to get over these things faster. So that was my number 2 mistake. Number three was, Robert Williams, do not do stock trades from your bed that you did not plan on your mobile phone. Okay? Now, if you did plan the trade ahead of time, cool. But you know what? You are better off sticking with your method of getting in within the last hour of the trading day and playing it based off what you've seen for the day, with the expectation that the following day will continue to run in your favor. And even if it doesn't, it'll bounce back off. Don't chase the morning spikes or the morning dips. Just continue to enter in trades in the later afternoon. I do feel more comfortable with that. You feel more comfortable with that. I'm talking to my future me, future you, me, however it goes. Do that because for you, you are able to see how it behaved throughout the day. And then you're able to make your decision towards the end of the day, seeing that it will still run or that it may stop out. And yes, you will miss out on trades, as I've watched quite a few that I said midday, ooh, I should get in this. And then I don't because I'm waiting for the end of the day. And it really gets to a point where it's like, oh, you know what? It's too late for an entry. But then the opportunity presents itself later, and even with other stocks. So take a break for the next 2 days, and then get right back on the horse. Listen to some more Mark Douglas. Go on your Tradeway community site. Listen to the Steady Trade podcast. Do whatever you got to do, and get back on the fucking horse. All right, man. Talk to you later.